Good morning. Welcome to this presentation on the early stage innovation company. This webinar is going to look at the reviews that are going to be necessary for the principles test. We've invited Bistorque Proprietary Limited to be the nominated company that we're happy to recommend to our subscribers to undertake due diligence reviews for any clients of yours that require separate reports to be prepared to substantiate the company director's answers to the 5 questions relative to the principles-based test. So I'm happy to introduce you today to Peter Miller, the Managing Director of Bistorque Proprietary Limited, and I'm just going to hand over the presentation to Peter now. So good morning, Peter. How are you?
Very well, Peter. And yourself?
Very good, thank you.
All right. So is my screen there?
Yes, your screen's there. You're right, ready to go.
Okay, excellent. So the principles-based test is a self-assessment for the board of an early stage company, and the reason that they want to get the rubber stamp as an early stage company is to attract investors. So the companies that that this is applicable to are privately held, under 3 years old, under 200K in assessable income, and under $1 million in total incurred expenses. There are a few variations to that, but that in a nutshell is it. So there are 5 questions which the legislation asks for. The activity, which is a commercialization one, high growth potential, revenue, scalability, cost, global opportunity markets, and competitive advantage, which is all about differentiation. So with respect to the activity, it's an activity that involves commercialization, therefore IP has to be generated. So in one of these self-assessments, you would have to do an IP audit just to confirm that what they think they own is what they actually own. And it applies to new or significantly improved products, services, processes, marketing, or organizational methods. So you've got to work out what the activity is that they're actually doing and whether that applies. With the high growth potential, one of the most important things here is the addressable market, and normally a company couldn't do this. This needs to be done by outside professionals. It needs to, whereby data needs to be collected. That data needs to be converted into units of inventory, which then can be used in P&L modeling. So high growth is something that, to prove that, you really need data. In terms of scalability, the things that a report would need to look at is, if we're going to increase the size of the business, is there actually demand to support increasing production? Will the operating expenses actually come down? Do management have the actual capabilities to undertake the increasing of the scale? And importantly, do they have an organizational culture which will support scalability? On the global opportunity, the legislation actually doesn't say global, it says beyond the local market. So what they're trying to do is say, we don't want cafes, we're looking for companies that have real IP, and that IP should have be able to be leveraged in terms of products and services beyond the local shores. So some of the things that need to be looked at in terms of global opportunity is the legislation in other countries, the business culture, and to do the P&L modeling around all of that. In terms of competitive advantage, that's differentiation. So can a company prove that it has a differentiation strategy? Is that sustainable over time? And in actual fact, are they investing for the future? That's an important one to prove with respect to competitive advantage. And if they're going to take it into other global opportunities, is that competitive advantage transferable, and are they building barriers to entry to prevent competitors from coming in? So that is essentially the principles-based test, and as you can see, it's not particularly an activity which the normal company board would be able to undertake, but they need to get the rubber stamp from the ATO to be able to attract investors. On the next page, just because a company gets a rubber stamp doesn't mean that they're investment ready. And so there are a whole host of activities that need to be considered in terms of doing an audit of investment readiness. The first area to look at is what type of investor is required, because the type of investor will in actual fact determine the type of documentation that needs to be generated, and secondly, what type of trust bridges need to be built to be able to secure an investment. It's also different in terms of local and international, in terms of the documentation. Getting access to VCs and angels and strategic investors actually is through networks. You can't just knock on their door. So through BIZTOOLS, we have a network that can open doors up and also develop the pitch deck for customers. The pre-money valuation is always a sticky thing when it comes to investment. Founders of companies always have a much higher valuation than what an investor does, and that requires real negotiation. Another factor when choosing an investor and looking at investment readiness is what is going to be the compatibility between the investor and the management team. Personality conflicts is not what you want. The investors will come onto the board. And deal structure. What type of term sheet is going to be provided, and is it favourable to your organisation? So that's an important one, and that requires legal expertise to determine how well the deal suits the particular application. But when writing the documentation, there are a few things that you need to look at, and when you're doing an audit of investment readiness. The market opportunity we spoke about earlier, the management team is important, the products and services, especially with respect to future roadmap, IP again, and then the customer. So we'll just go through those quickly. We've already dealt with the addressable market size. If that can't be done with great accuracy, then P&Ls or projected P&Ls tend to just fall apart because the costs associated with generating the revenues tend to be quite wrong. So that's a very important one to get right. Competitor analysis, understand your competitors, and they're not just the people that you're competing with today, they're the people that are going to come out of left field, as Apple and Google did in terms of mobile phones. Investors are always interested in management teams understanding the risks in the business and how they are going to mitigate those risks. So that needs to be written up. Investors also want to go into industries which are growing. They don't want to invest in ones that are not. Business models have to be adaptable. It's a favourite thing. Everybody talks about business models today. Most people don't know what they are, but they need to be adaptable. Value propositions move beyond just the customers. People talk about the value proposition to the customer. Well, in actual fact, there's a whole value chain where value propositions, the company needs to have a value proposition for everybody. Strategic plans are something that investors look at, and the competitive advantage we've spoken about before. So management team, strengths and weaknesses. Management teams have to be able to recognise that there are weaknesses, and they have to have a strategy for filling in those gaps, especially if an investment comes in. Exit strategy. Nobody will invest unless the team has an exit strategy. That might be trade sale, might be IPO, but an important thing in terms of investors is the timing of such a strategy. So those things need to be negotiated in terms of investment readiness. What is the management team's track record? That has a high impact on investors, as does the systems and processes that the company has deployed, including board of directors, and to make the company run smoothly. And culture. Some companies have the right culture to scale, some companies do not. And so doing an assessment of culture is important. Products and services, this is where most founders of companies are really comfortable. They can get a company to proven technology. They may or may not have a product roadmap, but investors are very interested in that. Fulfillment capabilities are all about what happens when an order comes in the door. Is the company just focused on delivering something which is in writing, or do they understand what their brand positioning is, and are they delivering upon their brand position as well as what's on the order? Scalability we've already looked at. That's all about lowering costs and increasing revenues. Compliance. Products, as you go into other territories, need different compliance requirements, and due diligence on that is important, as is customization. You can't move into another country without customization. So all of these things are considered in investment readiness. IP and legal. A lot of times investments require full audits of all of the IP, including patents, trademarks, brand names, domain names, even freedom to operate search. Even if you have a patent, they look at all of the contracts to see that there are no problems going forward, and the legal structure needs to accommodate an investor. Often they do not, and so it's important to have that put right if it's not. On the customer side, in terms of investment readiness, obviously an investor is really interested in, do you know who your customer is? And as strange as it might sound, often companies don't actually know who their customer is. They don't really understand segmentation. So in terms of investment readiness, segmentation analysis needs to be done. Advertising budgets need to be put forward. The impact of social media on building the company, bringing in customers, converting customers, is important today. Distribution channels, all investors ask this question: how are you going to get the dog food to the dogs? And that's all about, you can make it, you can have it in your warehouse, you can put a cloud up, whatever, but how are you actually going to get your product, your service, and that, you know, to a customer who's now going to pay money and convert inventory into cash? And importantly, investors are looking for customer insights. They're looking for people who see things differently, who are connecting the dots differently, and who are going to bring about the disruption to various markets and industries. So that's some of the things that BizTalk looks at when we're doing an investment readiness report, and I thank you for listening. Goodbye.
Thank you very much, Peter, and we look forward to any of the subscribers to the Early Stage Innovation Company product package who are seeking assistance for clients on the tests required by the principles test, or assistance in the general area of investment readiness, to make contact with Bistorque Proprietary Limited. Thank you very much for your support of ESS BASIP and ESS BizTools products. Have a wonderful day. Goodbye.